Is the stock market going to crash? Is this little bit of wavering that we've seen in the last few weeks the start of a much bigger move? Matthew, the Economist recently said, you know what, stocks are overvalued, we're going to see them come down. So is this the start of that?
I think one of the things I've learned over the years at The Economist is though we're often right in our call, it takes a long time for the call actually to affect what actually goes on in the market. So I don't know whether what's happening now is the start of that correction, but the underlying message is that I think stocks look very expensive by all the sort of rules that historically we've used to judge them. And I've written about a lot of bubbles over the years, and I've been, I think, right in the end. One of the reasons we wrote The Road from Ruin was we wanted to learn from all these bubbles that do happen, and we did have I had a lot of experience. I remember back in the late 1990s when people were saying the Dow should be at 36,000, and The Economist was wrong to say there was a bubble then. And I think what's happened now is that you've had the inevitable rebound from the credit crunch effect on the market, and that's been good. There should have been a bounce back in the stock market, but fundamentally, then a lot of liquidity came into the system, and I think people have just rode the momentum, and that's led us to a point where the share prices do look very high at the moment.
So if The Economist and you are right about this, what are we looking at? Are we looking at a garden variety 10 to 20% pullback? Are we looking at a catastrophic collapse to new lows?
I mean, I don't think that there's any reason why it should go anywhere near where the lows were in this crisis, because that was due to a lot of very artificial forces affecting the market due to the crisis and the way that everyone panicked. So, I don't think we're going to look at that kind of return to where we were, but I think we are, we're either going to see things just be very flat and go nowhere for several years, or we're going to see a correction that gets you back to a position which does make more sense. Often, though, it seems that the market just tends to sort of fade out and go plateau.
Especially after bubbles like this. Certainly, if you look at 1973, 74, that's exactly what we saw.
Exactly.
And Japan has been that way.
Japan, classically so. Yeah.
So I wake up this morning and I see Goldman Sachs kindly telling me not to worry about stock prices because, in fact, they're cheap because interest rates are low and it's only 18 times forward operating earnings. Why have you concluded that stocks are expensive?
I think one of the fundamental worries that we have is that so much that's going on in the capital markets at the moment is the result of this successful attempt to stop the financial markets collapsing completely in the aftermath of the failure of Lehman Brothers. So governments around the world have pumped so much money into the system to support the banks that they can't keep on pumping in. And so at some point something's got to give, and a lot of that money was supposed to go to actually ultimately benefit the real economy through lending, but in fact has ended up going into speculation, particularly around commodities, but also stock prices. And governments are running out of capacity to borrow and pump money into the financial system, and so at some point the money is going to have to come out of the system again, and that fundamentally is when we think the bubble will burst.